Okay, I think we can start. So hello everyone and welcome. So now we are live on our webinar platform and also on our YouTube channel. So for our viewers that are watching us right now on YouTube, so if you would like to ask questions to our speakers, so please register by the link you see in the stream description. Because today we speak about financial fraud. So welcome to our webinar. My name is Olena Gryniuk. I will be your host today. And my guests are Fernando López-Fando, Commercial Director for the Continental EU Rapid Confirmation, which is a part of Thomson Reuters and a leading provider of secure audit confirmation services. And Sara Ait-Ouba, Regional Manager for Germany, Italy, and Austria at Confirmation. Hello, Fernando and Sara, and welcome.
Hello, thank you.
Thank you very much.
So before we start and before we go to the topic, let me mention very shortly organizational information. So we plan our webinar for 45 minutes. We are recording this webinar, so right after we finish, you will receive the link to the video and the presentation as well. And we will start from the presentation right now. And after that, we will be ready to answer your questions. So please type your questions into the chat and even during the presentation. So whenever you have them. So let's go to the topic. Today, as I mentioned, we will be talking about financial fraud. So fake or forged financial statements and signatures, and these are actually the frauds that I think bankers consider that mainly or only human employees can detect and prevent, especially if we are talking about corporate customers and large amounts of transactions, transfers, and loans. So let's discuss how, with the use of the new technology, banks can detect and prevent those frauds in a faster and more efficient way. So Sara and Fernando, I'm passing the word to you.
Thank you very much, Olena. Hello, everyone, and thank you, Olena, for having us today. We're very excited to be able to share the next half an hour, 40 minutes with you to discuss this, for us, pretty exciting and relevant topic. So hopefully by the end, we'll be able to have a good discussion about this one. So my name is Sara Ait-Ouba, as Olena mentioned, and today's topic, as Olena said, is the importance of the use of technology to help combat fraud and mitigate the fraud risks. So before I start to share the agenda with you, I just wanted to spend a couple of minutes introducing Confirmation for those of you that may or may not know of us yet. So that gives a little bit of context as to where we actually fit in within the whole topic of technology and risk mitigation. So Confirmation is the leading digital platform and global network for confirming financial data. In other words, we're essentially a web-based tool that connects auditors and financial institutions for the financial audit of their corporate clients. So what we've done is we've replaced the traditional outdated paper-based process or email letter process with a much more secure and efficient alternative. Confirmation has been around for over 20 years. Our founder, Brian Fox, actually invented digital confirmations. And about 2 to 3 years ago, we were acquired by Thomson Reuters. And so now we're part of an even bigger organization, which further extends our reach globally. Confirmation is already being used by over 16,000 audit firms and over 4,000 banks globally. And one of the most important parts of what we do as well is that every user on our platform is validated. So we ensure that no unauthorized party can access the platform or any customer data. So this not only provides or improves, I should say, the quality of audits, but it also increases investor confidence in the audited financial statements of your clients. So here, I just wanted to give you a little bit of an overview of some of the banks that are already part of our global networks and that have already digitized, let's say, or centralized as well how they receive and respond to audit confirmation requests. So you see we have many, many global banks, such as your HSBCs, your BNP Paribas, ING, your Deutsche Banks, but we also have many local banks. For example, in the CE region, we have many Citibank departments, be it in Poland, Slovakia, Czech Republic, but also Raiffeisen banks in Austria, etc. So the network keeps growing, and more banks are adopting a digital process. All right, let's have a look at today's agenda. We've broken today's topic into 4 parts. So we start off with the very first one, which is why are we seeing an uplift in financial statement fraud? Fernando will be starting with that part, and then he will move into how fraud can threaten a bank's profitability and reputation, and we'll give you a little bit of a real-life example, so to speak, to show you what has already happened. Then the third point, we'll give you a couple more case studies of fraud cases that actually just happened very recently during the pandemic. And then we'll finish off by speaking how technology impacts the mitigation of fraud. And then, of course, we'll have some time at the end to go through any questions that you might have. Right, move over to Fernando.
Thank you, Sara. So why are we seeing an uplift in financial statement fraud? As you may have noticed, in the past 2 years has been really disruptive, to say the least. And with COVID-19 vaccinations being done as quickly as possible and countries beginning to lift restrictions, we are seeing that organizations are entering in what we call a post-pandemic reality. And don't get me wrong, this is great news because we are starting to see the light at the end of the tunnel. However, businesses have had to make significant changes in business operations to adapt. For instance, they have moved all their employees working from their offices to being remote. And then as well, employees adopting technology at a pace never seen before. And all of this has been done to ensure business continuity. So this report that we have here has been done by the Association of Certified Fraud Examiners, the ACFE, in collaboration with Grant Thornton. Basically, what they have done is they have surveyed anti-fraud professionals around the globe regarding the current and expected effects of COVID-19 on the fraud landscape. As you can see in the slide, 51% of organizations have uncovered more fraud since the beginning of the pandemic, and 71% expect the level of fraud impacting their organizations to increase over the next years. So these two statistics clearly show that during financial crisis, companies are more eager to commit fraud. As a result of the increased expectation of fraud, 38% of companies have already increased their budgets for anti-fraud technology for the FY 2021, and 80% have already implemented one or more changes to their anti-fraud programs in response to the pandemic. So we have seen that economic impacts and changes in consumer behaviors due to the pandemic will likely remain significant factors affecting companies and their fraud risks and anti-fraud programs going forward. So now let's have a look at some key findings from the ACFE report on how the overall level of fraud is expected to change post-pandemic. In the first figure, you can see the change in the amount of fraud uncovered, and in the second figure, you can see the change in level of fraud awareness. So basically here you have different percentages where you can see the 51 that we have mentioned before. So going to the next slide, we just had a look at why we are seeing an uplift in financial statement fraud. So now I would like to give you a real example of how fraud can threaten banks' profitability and, more importantly, reputation. There are many types of fraud, and many times when people hear the word, they think about asset misappropriation, but today we are talking about financial statement fraud. According to the ACFE, financial statement fraud schemes are the least common, reported to only be 10% of fraud cases, but most costly to organizations. So the thing is more difficult to occur, but when it happens, the impact is really big. So now that we have defined the type of fraud we are talking about today, let's take a look at a real-life example and how it played out, as well as how it affected the banks, auditors, and investors involved. Parmalat was a dairy and food corporation, which is a subsidiary of French multinational company Lactalis. I'm going to be mentioning a few bullet points, and then I will summarize the main fraud for this case. So this is a case of 10-year fraud by executive management, which was discovered in 2003 and is Europe's largest fraud with 4 billion euros. This had, obviously, a huge impact in investors, auditors, and banks involved. So you may be wondering, what happened there? So Parmalat defaulted on a 150 million euro bond payment, although having reported to have 4 billion in cash. Their CEO, Callisto Tanzi, controlled the fraud through Chief Accounting Officer Luciano del Soldato, who handled the corporate books, which would normally be done by the CFO. But in this case, they both were engaged in this fraud. An actual forged confirmation letter was provided from Parmalat for an account supposedly held with Bank of America of 4 billion, which didn't exist, as later confirmed by Bank of America. Auditors certified the 2002 financial statement based upon this false confirmation that the company held the assets at Bank of America. Parmalat acknowledged in a press release dated December 19, 2003, that the assets in its 2002 audited financial statements were overstated by at least 3.95 billion. So Parmalat was declared insolvent in 2003, and CEO Callisto Tanzi was indicted for fraud and arrested. Bank of America had a $100 million fine, as well as Parmalat's auditor that had a $150 million fine. So basically, summarizing this case, you can see how simple it is to prepare this fraud scheme. And the problem with Bank of America is that they were not involved in this fraud, but still they got a fine of 100 billion. So this impacted in their reputation and obviously in their profitability. Now we are going to see the example of the forged confirmation. So in the top left corner, you can see the stamp of Bank of America, and this was not an authorized confirmation response center. As well, next to it, you can see the fax number that is from New Jersey instead from New York. The balances started off small and eventually grow to 5 billion over 10 years. So this is not something that is happening normally. They start and they increase progressively. And then the person who signed this report was an employee for Bank of America, but he was not authorized to give this information. And then I am handing it to Sara.
Thank you, Fernando. Right, yeah, the Parmalat case I think is a pretty good example, especially for the early 2000s. But what I like to do now is to give you a couple of fraud cases that happened just during the pandemic. But one thing to note here is it just shows how easy it can be for fraudsters to manipulate, especially a manual process. And you'll see this as well in the next two examples that I'll share with you. So let's start with Wirecard. I'm sure most of you are aware of this or have at least heard the name Wirecard in some shape, way, or form in the past couple of years. But let me give you a brief overview. So Wirecard was a German payment processor and financial service provider, and they were founded in 1999. And they were seen as one of the most successful fintech companies in Germany. which is something that doesn't happen very often. Germany isn't exactly known for its fintech business, so Wirecard really was a big deal in terms of its success. It was at one point even part of the DAX 30 and valued at a 24 billion euros amount. So that shows, let's say, the scale of the company. So what happened was the company was accused of accounting malpractice by the Financial Times over many, many years. And in 2019, Wirecard finally decided to appoint KPMG, let's say, separate auditor. The audit firm was EY, but they appointed KPMG to conduct a special audit with the goal to put an end to these accusations that were repeatedly made by the Financial Times, but also other people. When the report was finally published, KPMG concluded that they were facing, let's call them obstacles, in their attempts to verify that large parts of the business were in fact real. So some of the things that they revealed were that they weren't able to verify a majority of Wirecard's profits from the period from 2016 to 2018 were even real or genuine. So among some of the information that they were looking for were original bank records detailing over 1.9 billion euros of payments, which Wirecard said were held at 2 banks in Asia, in the Philippines to be precise. So the result of this, to make a very long story short, is that in 2020, the company filed for insolvency when they finally admitted that these 1.9 billions that KPMG previously wasn't able to account for and were supposed to be held in escrow accounts in Asia, weren't only missing from the balance sheet, they actually never existed at all. So the CEO has since been arrested. The CEO is actually still a fugitive, so nobody really knows of his whereabouts. And one of the big, let's say, results of this as well for creditors is that they are still owed or were owed 3.5 billion euros. So despite, let's say, there was a lot of media attention and astonishment across business circles, politics, regulators, etc., the scale of the Wirecard plot, the fraud itself really was quite simple and just shows again this type of fraud, what happened at Wirecard, isn't really new at all. On the other hand, you can see, or we have an example of, let's say, a much smaller scale of a fraud at Commerzbank Mattersburg in Austria. But despite its smaller size of just 700 million euros for a country the size of Austria, it was quite significant and actually accounted as the third largest bankruptcy fraud case in Austria. Here, for those of you who may not have heard of it, what happened is that the founder of the bank, the CEO, Martin Pucher, he had founded the bank and he admitted after many years of faking most of the bank's assets. He had created fictitious loans to real private individuals. So he gathered the names of these people from phone books, from any other publicly available data, registers, etc. And what he did is he inflated these earnings with fake interests, which he said he had earned from the non-existing loans. Another thing that he had done was that up to 426 million worth of fake bank statements were made up by him and supposedly held at 8 Austrian banks. Now, the story behind these fake bank statements is quite a funny one. If you want to laugh about let's say, this sort of fraud, but what he has done, this simply shows at what lengths a fraudster can go to. So he would send his employees across the country to airports with the fake bank stationery. So, for example, say the bank statement was supposedly done by a Bank Austria. He would fly his staff out to the different airports so that they could make sure that the post stamp was in fact the correct one and make it appear that they had been sent by the financial institutions in questions. How was the fraud uncovered? It was uncovered through a pretty routine check by the Australian National Bank in 2020, and the CEO immediately admitted to everything that had happened. And this is partly an example of fundamental regulatory failure, not just by auditors and the regulatory bodies that over years and years and years didn't uncover this fraud, but it also shows, again, how a manual paper-based process has left essentially the floodgates open to fraudulent behavior, which really and truly could have been avoided had a digital process been in place, such as, for example, the confirmation platform would have helped to avoid this in the first place. All right, moving on. So we've discussed up until now why we're seeing an uplift in financial statement fraud. We've given you a couple of real-life examples, Parmalat being the one, but also Wirecard and Commerzbank. Mata's book on how fraud can threaten a bank's profitability and reputation. So now let's have a look at the fourth and last point of today's discussion, how technology can help mitigate fraud. In general, I think we can say we're seeing that most financial institutions, especially the ones we're speaking to, are moving towards further digitizing their processes to enhance security. And we've done a survey with approximately 200 heads of technology, operations, risks as well, globally. And what they've told us their main focus area are this year are, you can see them here on the slide. One, system upgrades, improving risk and control, but also automation of processes. And our top three priorities that were mentioned that are quite key for these banks to strengthen the businesses is, again, risk and compliance, finance, and fraud mitigation. So I think one of the key benefits of fighting fraud is that it prevents reputational harm to your business, as we've just previously discussed with Bank of America and Parmalat case. But taking a proactive approach also provides several other short-term and long-term benefits to your company. So if we look at some of the priority points that were mentioned in the survey, I think we can confirm in a way that when a bank updates its technology, it'll have a positive impact also on the perception your clients have of their bank. The clients want to know that their data is safe and that the banks, or that you as the banks, are working efficiently on their behalf. Another point is that using digital technology also frees up a lot of your staff's time because you can automate a lot of the monotonous work, and it frees up time for them to actually do tasks that are much more, require more expertise or are much more important as well. Embracing technology will also prepare your company for new and unpredictable challenges beyond this pandemic. I think we can all agree that unprecedented things always happen. So you always need to be prepared to continue investing in that. And one last point, we're seeing many, many more corporate clients reach out to us as well to discuss how we can help them and their bank to make the confirmation process more efficient, but most importantly also more secure. So especially in the wake of a case like Wirecard, we've definitely seen a significant uplift in banks and audit firms investing in technology to keep their client data safe, save them time, but also reduce the risk of someone using their bank name to commit fraud. So we'll have a quick look at how we've done this and how we do it and what way confirmation actually helps that. And Fernando will take you to these last couple of slides.
Thank you, Sara. So here we have the key benefits listed. So the first one would be efficient. So basically what we do with the banks is we avoid them receiving like 3 or 4 times the same letter. And instead of receiving letters via post, letters via email, letters via fax, or whatever the case is, they are just going to have one channel, which is confirmation. Then our platform is really secure because what we do is a know your customer of all participants. So basically, when you are receiving the confirmations from the auditors, we make sure that they are who they say they are. We make sure that they have the right license, and we make sure that they have powers to request this confirmation. So basically, you are going to receive this information, and you can be completely sure that information is okay. And then at the moment, we are working with 4,000 financial institutions. So we have been through a lot of security assessments. So this should give you certainty that we are secure. And then last but not least, this is a free service for the banks. So auditors are paying a small fee using the platform, and this is because they are initiating the process. Here we have the confirmation workflow. So basically, the auditor is in the middle, and this is because of the norm, the ISA 505, which says that the auditor needs to be in control at all times. So basically, they will initiate the request with the client. They will ask for the client authorization, and once they have that, they can send the confirmation to the bank, and the bank, which is you in this case, will review the information provided by the auditor and answer with all financial positions of the client in the bank. And then you can see this is a really simple process. It's only 4 steps, and you can implement the onboarding really fast with us.
All right. So this was it from our side. Here you have our contact details. So if you do have any questions, please feel free to reach out. We are more than happy to get back to you and discuss any further questions you might have.
Thank you very much, Sara and Fernando, for very interesting presentation and the use cases. This was just wow, in my opinion. Yes, and I do encourage our attendees, please type your questions into the chat so we have time to answer your questions. Meanwhile, I have mine. So my question to you, I have several ones. So the first will be is, what is the key thing that you need in the process to mitigate fraud that you described in your presentation? And second, maybe this will be 2 questions in one. What bankers and auditors, as you mentioned, need to know and need to pay attention at to really be aware and prepared and prevent such kind of risks that you showed?
Yeah, it's a good question. I can jump in first. I think one of the main things really that Fernando also mentioned quite well in the last slide is really the validation of the users, because one of the key things that came up in the majority of all these fraud cases we presented to you is that either third-party involvement. So when you're sending a bank confirmation request, or any other type really of information via post or email, there's no way for you to know who can intercept it. So you don't know who sent it, you don't know who is intercepting it, and you don't know who's going to receive it. So you have gaps everywhere. And so one thing that we ensure with confirmation is that, as Fernando mentioned, is the validation. We do a KYC on the audit side, so we know whether it's someone from a Big 4 company or it's your Myers and Partners GmbH, whatever it is. We make sure that that person is in fact who they say they are, and that the company also exists. And then this gives the bank security that the request does come from an authorized person. And then on the other side, for the auditors, of course, we also do a validation on the bank side. And here, the security for the banks and the clients, the corporate clients, is that the team that responds to the audit requests is in fact the authorized team, because that's another thing. When you send a post letter, the auditor doesn't know that it does in fact go to the correct team.
Mhm.
It can take weeks, and you have no idea where it actually goes through. So those are the validation. I think it's something that a lot of people don't take enough into consideration, the importance of that, and that definitely helps. And yes, of course, the corporate clients giving their authorization as well, which is all done centrally on one platform.
Yeah, and I would say this is in line with the strategy of the banks at the moment. So they are moving to digital processes and they are moving to more secure methods. So confirmation really give them the assurance for that.
And my question also, next one will be about your platform that you showed, right? Confirmation platform. So which resources and for the banks and not for the banks, because I noticed that we have also to have customer on board, right? We have to have auditor also on the platform. So which resources are needed in the sense of time, also maybe in the sense of employees, to be onboarded on your platform and start using it on a constant base?
Okay, so basically, the client interaction is only to provide the client authorization, and this is based in the norm. So the only two parts interacting in the process are the audit firm and the financial institutions. In terms of resources, so what we can tell the banks is that they are going to minimize the hours of their employees, because at the moment the problem is that they are receiving a lot of times the same request from for the same client, so they need to check if it's the same or not, so that takes time. So if they are using the confirmation platform, we usually see a reducing time of 50%, let's say. And then if they implement automation, which is something other banks are doing, obviously the efficiency is going to grow more.
And
Also,
sorry.
Just I think one important point as well to add is that it's essentially a plug and play system. So on the bank side, but also the auditor side, there's no need to install any software, to have any IT related changes to the system. It's a web-based portal. So really and truly a bank could register and we set them up, and the next day they could start using it. So it's very user friendly in that sense, and doesn't require any additional.
Can your platform be used also for SMEs? I mean, for the smaller business customers, for the ones that do not have the obligations to do the audit of their financial statements?
I think, I mean, small. What do you mean by not the obligation?
I mean, the financial statement is not looked through or checked by the audit companies, by the auditors, external auditors.
Well, I would say they can still use the platform. So basically, as long as you are an auditor and you want to confirm a financial position with a financial institution, you can initiate it through the platform.
Okay. So this should be initiated by the auditor, right?
Yes.
Okay. We have a question from Mina. What shall I do if I have two financial statements from two auditors and the breakdown of the financial was different? Thank you, Mina, for the question.
That's a good question. So actually, our platform is a communication tool. So what we do is we give the possibility to auditors to confirm information with the banks. And once they receive the information, if this case happened, for instance, you can send it back to the bank and you can tell them, this is not matching what my client told me, or this one is not matching this other one. And the bank will check again for you and they will provide you with an answer.
Okay. Okay. Have you seen, by the way, any changes in the way auditor companies and banks are outsourcing?
Yes, definitely. I would say so. I think a lot, or at least what we've seen, or I've seen in my regions when I speak to the banks and auditors, is that more and more are looking to third-party providers, because once they start thinking about maybe we can do it in-house, they realize the resources, that's exactly where then the resources go to, how expensive and how much work it is. And it's just much more efficient and cost efficient as well to outsource it to those companies that specialize in that, especially when it comes to the expertise, when it comes to maintaining that IT part as well, making sure that it's constantly updated, etc. So I think the trend there is definitely for both the smaller banks to the medium and bigger ones, but also audit firms to use third-party providers.
Okay. I would like to ask you the questions and refer to the beginning of your presentation, when you mentioned that, yes, that number of frauds is increasing both during the crisis times, and also, of course, now we see that the fraud prevention and detection is one of the top priorities for the banks because of the digitalization.
Yes.
And it causes to the situation when, we have, as you said, the number of frauds is increasing everywhere, and really, like everywhere, banks and other financial organizations should increase their budgets on fraud prevention, and then next year new frauds which already maybe managed to deal somehow with the previous anti-fraud measures are appearing, and this causes to the bigger and bigger budgets for the fraud prevention. How do you see the situation? Will this really be a non-stop, never-ending story of increasing and increasing budget on fraud prevention?
Well, I mean, unfortunately, at the moment that we are facing a financial crisis and we are going out of the pandemic, most likely we will keep seeing more fraud cases. So in the previous crisis, 2008, we have seen a really big increase of fraud cases. So obviously, when the economic is in a bad shape, people are trying to do this sort of schemes. So the best way to mitigate this, and we have been discussing a lot with banks during the pandemic, and they were saying we want to join confirmation because it's the right thing to do now, because our employees are working from home, so we have no way to mitigate risks. So that's why we want to use the platform. And then apart from that, after the Wirecard case, the banks were saying like, well, we don't want to be at risk, have a potential fine, and not even being involved in this, because anyone can take a confirmation from us and they can say that they have a different financial position. But if we are just using confirmation and there's like a trail or whatever the case is, we can go there and say like, no, we have communicated to auditors that we are just using confirmation, so this could not be possible, and this like a proper fake fraud scheme.
Yeah, and maybe just to add to that as well, I think even though we are in a very digital age, I think in many cases there's still a lot of catching up to do, and so especially in the regions I work in, at least, there's a lot of catching up to do when it comes to digitizing a lot of processes that have been traditionally very manual. So I think there's still a lot of educating, for one of the better words, in the sense of being proactive about what can we do as an organization, and you will always have to continue to invest in technology and improving your processes. But I think you need to start somewhere. And then having that overview and being able to assess, okay, this is where we have our gaps, our potential risks as well. What can we do to avoid those? And then speak to the people that, within those different areas that you work in could help. I think that's the first step to kind of look at. And it doesn't always have to be a big investment necessarily. That's, I think, why also it might sound daunting to invest in technology, but down the road, long term, it will definitely pay off. And again, that's great, without speaking too much about confirmation, but it is a free tool for banks. So that makes it, much easier, I think, to think.
I actually just wanted to ask, because Sara, you mentioned at the beginning of the presentation that among the users of your platforms are network banks, like Raiffeisen, for example, in different countries. So I wonder, does each and every bank in each country should join the platform separately to have this access? And is there any exchange between the countries? I don't know, for example, for international customers,
Yeah.
how does this area work?
That's a really good question. So it varies. Sometimes we have many banks where we do a European or global rollout. That's often the best and easiest for the local banks as well, because they can just piggyback on the main agreement we have. But sometimes the regional banks are much more ahead, and they are the first ones to say, you know what, we're going to change our processes, and so you will see them doing, because it's so easy to implement, that they just do their own thing. But the best is the more local branches, or the more banks, your Raiffeisens, for example, the more you have in the network, the better. Also for your clients, because then if you receive requests, you can share them across your countries. Let's say Raiffeisen Romania receives a request and they see, actually, this is for our colleagues in Austria, then they can send it to the colleagues in Austria. And that gives a much better client experience, because there's one tool and centralizes everything.
So basically what we build is the structure of the bank. So we will put the parent and we will do all the different branches, and they can reassign or they can do whatever they need.
Okay, so we don't have questions from our attendees anymore. And you answered all my questions actually that I had. So maybe some tips or recommendation from your side to end this webinar on how effectively and how to why banks should start using your platform right now.
Shall I start? Or well,
Sara,
you can go first. Yeah.
I'll go first. Okay, all right. Well, I think really it's a bit of a summary of we chose these fraud cases, these case study, just to show everyone how easy it is to commit these frauds. Unfortunately, it's a reality, a world we live in, and equally so, there's a very easy solution to that, if that's the area that you work in. So I think, given the benefits of not only making your lives easier, more efficient, it's a free tool. So I think I'll leave it at that. But Fernando, if you want to add anything else.
Yeah, I would say in general, it's important to mitigate risks, and not only with this process, but with them all. And it's important to start engaging more with digital tools and trying to make processes more efficient and secure. So yes, if you have any questions, we would happy take them and help you with that.
Yeah, thank you very much, Sara and Fernando, for your contribution. Thank you to all our attendees for staying to the very end, and Mina, for your question as well. Thank you to all viewers. Join also our next webinars. You can subscribe our YouTube channel and also our LinkedIn page to stay tuned to the next topics. Thank you very much and see you soon. Goodbye.
Thank you, Lina, for having us.